Hey, what's up everybody? Back doing another weekend video. I'll probably do a few more videos during the week when things get going again in terms of a bullish environment. When it's not a bullish environment, like don't overdo it, right? Don't overdo the videos, don't overdo your trading, don't overdo spending your time on the charts. So, started back doing videos a couple Sundays ago, keeping it consistent with the Sundays. I hope you've been enjoying them. Also let you know our community has officially started. So the new community, market participants, it is on, it is live. We are having a kickoff call tonight at 7 o'clock, and then tomorrow we are full go. So if you do want to come trade with us, learn about the market, learn from some great traders, spend a day with some great people, come on by. You have to shoot me a DM on Instagram or an email. You can find those in the YouTube, in my YouTube bio, if you're not already following me on Instagram. So let's get into it. I'm just going to do a quick video here on Bitcoin, ES, NASDAQ. Not too much has changed from the past few videos. However, there was new information that was given to us this week. Some pretty big information. Listen, if you wanted just a prediction, a simple prediction of what I think is going to happen, I'm of the mindset that crypto is going to bottom here. It's very imminent, extremely imminent. If I'm wrong about that, I'm going to show you where and how I'll be wrong about it. But I do think there's possibility that this week is it. This will be the bottom, and we will have a bullish month in crypto. So if you look at Bitcoin, we got 1, 2, 3, 4, 5 months in a row. Right now we're acting as an inside bar. This is the major backtest zone. I'll explain to you, for those of you that are kind of new or didn't follow me back in the 2018 to 2022 period when I was doing videos nonstop, I'll explain to you why this is a major zone and a major backtest. And if you're an educated trader and you already grasped this, then hey, it's a refresher if you're watching this video. So don't forget, notable levels on a chart are psychological levels to the market, the market of people and traders that participate in these names. So when you have a previous all-time high, you have emotions into that event. So when traders were trading back in, I don't know why it doesn't let me do this on Bitcoin. Yeah, I don't know why. Okay, I was going to try and do a video replay. But let me see. Is it going to let me do it? Is it going to let me do it? No, it's not going to let me do it. Okay, I'm just going to go through it. So I don't know why TradingView is doing that now. So think about the traders that were in Bitcoin at this time, in the crypto market at this time. What does this look like to you? I can tell you what that feels like. Like, I know what that feels like. I've been in numerous charts that look like that. And that is the best feeling in the world. There's no better feeling. I mean, let's not talk about like, hey, you had a baby and you love your kids and all that stuff. There's no better feeling than being in something, being right about it, and making a ton of money. And when you look at this chart in here, you know that feeling. If you had it before, you also know what this feeling looks like, right? This is euphoria, and it is the best. And this is the happiest you will ever be in your life when you're in something like this. Everybody around you loves you. You're so nice at this time. You're the best person they've ever met. And then they learn a little bit more about you during these cycles. Like, oh my gosh, you're not that person anymore. Like, you're terrible. Like, I can't wait for that market to come back. So we know what this feels like. So think about the event. You're making all this money, every dip's being bought. We're pushing up higher. You stuck it out over here for so long, and now here we go. And most people, they're not going to sell the top, right? First off, how do you know it's the top? There's no way to know. It's a guessing game. If you called the top correctly here, you probably tried to call a top here. You probably tried to call a top somewhere in here. You called the top multiple times. It's very difficult to mark a top. That's why I always talk about protect your higher low. When the chart is going up and your account is going up, understand where you're going to protect your money. You're going to protect your money here. You're going to protect your money here, because eventually we're going to get this. And if you don't protect your money, you give it all back, then you become very frustrated and you have terrible thoughts about all the big mistakes that you've made. So anyways, in this cycle in here, you know what these people felt like. And they know the regret that they have that they didn't sell at that level. So that level becomes a major psychological level. So 58,000 to whatever, what was the top there? 64,000. So 64,000 became this major psychological event on this chart because people were making so much money and they thought it would never end. And while they were making that money, they didn't sell because they didn't sell along the way. When were you going to sell? You just continue to hold. And then eventually you have this pullback. And that pullback right in there is 55%, roughly 55%. So that 60 to 64 level becomes such a psychological memory, and it damages you, and it damages the traders, and it damages the chart. It affects the chart. So if you made 100,000 and you've given back 55%, that's a lot of coin that you gave back, and you're not thinking about, hey, I'm still up 45K, I'm still up X amount. You're thinking about, oh my God, how much I gave back and what I would do to sell if I get that opportunity again. So that's why it becomes this major psychological level. And now it becomes a resistance zone for bears, for shorts, for anybody that says, hey, we get back up there, even if I'm a bull, I'm like, I don't know what's going to happen in here. I'm going to sell in here. So what happened in the Bitcoin chart was we went back up, and because we had such a significant drop, going back up and making a straight new all-time high with no consolidation, no accumulation period of trading sideways, we had bearish divergence. What does bearish divergence mean? You have a chart making a new high, right, from the previous high, but you don't have your oscillators making a new high. So you have bearish divergence. The momentum is waning, which tells you don't buy that new high. You had to have found your signal earlier. This is why you get cut up chasing new highs versus identifying the buy opportunities sooner. This costs you a lot of money. Bearish divergence, bullish divergence, this is something that every trader should know and make it your priority to understand it. So what happens is we sell again, and this one was the bear market. This was a significant sell, a major sell. Okay, so we had a major sell in here on this on this Bitcoin chart. So now we know the 60 to 70 range. What was the top there? The top was 69. 60 to 69, major psychological level. And then everybody lost their shirt, right? It's a 77% pullback. This is damaging. This will end most traders, right? Short term, right? Traders, it's hard to last in the business because these events happen and you don't see them. And when you're making money, you're not really anticipating these things because you've been making money and someone told you to buy this and it's working out and it was right. And you know, everyone's celebrating and everybody's in the echo chamber, euphoria mode, and they lose the money. That's it. It's hard to come back. It's hard to want to re-engage in the market because you're so damaged, you're so scarred. And that's when you probably try to learn. You probably try to find a mentor. You probably start to watch YouTube videos, or you start looking for education, books, whatever it is, to understand, like, what was it that I missed? So in this case, 77% pullback is very hard to come back from. Now, if you just bought and hold the entire time, man, you went through a roller coaster. But look what happened when we came back to this level. Okay? When we came back to this level, first off, we saw accumulation in two different time periods. We had a 6-7 month accumulation. We broke up above it. And then we had another 6 or 7 month accumulation just above it, right? Let's go look at that on a weekly chart down in here. So we had the accumulation, we had the break, back test, and then continuation. You see where that back test was going? Roughly to this wick in here, to the top of the original bounce. Let me zoom in so you can see that a little bit better, right? See that right there? See those two wicks rejecting it? Let me just clean that up, right? See that right there? And then there, and then the break. There's your candlestick, right? And then your back test, your back test. Look at this accumulation period with back test not breaking. Very notable. What's notable about it is we broke the lower high structure. So we have a low, continuation of the downtrend, continuation of the downtrend. You know what this is right here. That's bullish divergence. and then a lower high, an inverse head and shoulders, and we break. So we broke the lower high structure and we have a higher low. So the chart behavior is changing. So back test is like, oh, it's not ready to go. They need to accumulate more. We need to accumulate more. Back test, not ready to go. Need to accumulate more. Then there's the breakout. Going back towards that previous psychological level, the place where people are damaged, the place where people are just breaking even. What happens when we break above this level? We break, oh no, it's selling again. Time to get out. Oh wait, buyers. Oh no, not breaking, double top. This is buyers. Oh no, we broke lower. Oh, bought up, buyers. Buyers, accumulation back at that major psychological level. That's what you're watching. Accumulation at that major psychological level. In this zone, you are frustrated. This is so frustrating. We're going. Oh no, we're dumping. Oh no, we're going. Oh no, we're dumping. Oh no, we're going. Oh no, we're dumping. Oh no, we're going. Oh no, we're dumping. Right? How much money you lose in here? You lose. If you're boom, 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 you're trying to go, you're losing. You're chasing and it's not going. You're selling on the way it's going down. Oh, it's not going down. You're buying back again. You're chasing constant cut up, which is extremely frustrating. That's why patience is so hard for traders to understand. Like me starting my new community, like I've already had it in my mind that this is not going to be like, oh, you got to buy here. And it's like, oh no, we sold. Like you got to understand what's the structure? What are we looking at? Understand the big picture. Okay. What's the invalidation? Invalidation of this chart would have been if we lost this accumulation zone in here. That's the concern. If we lose this, then the chart's breaking down again. We didn't. Reversals. We kept on seeing reversals in Bitcoin. And I'm talking about Bitcoin in here because it's a great chart to study and understand. And then we saw the continuation. Big continuation. You could find the divergence there on the monthly chart. And then we started to sell. We're correcting. And what are we doing? We are coming back and back testing the major psychological levels on this chart. This is the most important spot on this chart. And look what happened. We escalated into it. This to me is art. This is like, wow. It's so amazing how all of us traders and institutions can get together and create these charts and print them the way they print. Because that's what happened. You had a ton of panic, bear flag, panic into the zone. And here we are back again at the most critical point in the Bitcoin chart. We are back in that zone again. Now, let's understand what is currently happening here. We dumped into it straight. Major drop. Look at that. Major drop. From that fake out wick to that low, we dropped 40%. It could always get worse. Even right now, it could always get worse. And I'll show you, it could potentially get worse. I'm of the assumption that this thing is going to reverse imminently, but I'll show you what happens if I'm wrong, right? And if I'm wrong, there's still opportunity later. It just means it's going to be harder to get back up and make new all-time highs, but it'll still be opportunity. If we do have a significant drop again, and we have to come back lower, we will still see a bounce. Let's just say it's 47 to 84. Well, wouldn't you think that was a great bounce? 100%? That's the opportunity. So we just got to be prepared for what's happening here. But this escalation down into the zone made me think, I like the escalation. That tells me the expansion. We're getting to a zone. We're going to start to see some accumulations and buyers. 3 straight weeks into the dump. Since that wick, we've had 1, 2, 3, 4 weeks. This weekly candle is about to close. 4 weeks as an inverted hammer inside the mother bar of the dump candle, the beginning of February, end of January, of trading sideways with choppiness. Choppy. You think we're going, oh no, we're not going. We're dropping. Oh no, we're not dropping. We're going, right? Choppiness. Exactly what we saw in here. Choppiness. That's what we're seeing right now. What this tells me here is we're battling accumulation versus distribution. Continuation of distribution. There's enough bulls in here to defend this, and there's enough bears in here still to sell this that we've been unable to move. Eventually, there will be a pop. Right? Boom to the upside, down to the downside. So let's go and zoom in what's happening here on the daily time frame. By the way, this line in here is just talking about the potential that after this move, we just retrace into this golden pocket and then we look for expansion later on. Okay, so I'm not drawing a wedge in here. A wedge doesn't draw perfectly, but we still have not changed the lower high trend. Lower high, lower high, lower high, right? Potentially just another lower high. Okay, so we're just downtrending in here right now. But what happened this week was very similar to what happened a few weeks ago when we saw the escalation for the 38% drop. We saw accumulation, it looked like, fake out breakout. We broke these new highs, right? We broke to a new high and immediately sold off. That was a red flag. They wanted to get to a destination. They've gotten there. The question is, they need to get it a little bit further down into the golden zone. Golden zone, guys, for the videos that you're watching that I'm doing right now, just a reminder that the golden zone is between 6.1 and 6.5, 6.18 and 6.5. That is the golden zone. This is a major buy zone on charts, okay? Major buy zone. 6.5 to 70.7 is the platinum zone. But for the sake of the video, let's talk about platinum zone, golden pockets. I'm just referring to the whole thing as the golden zone. Okay, so what happened this week was we saw a breakout candle, right? We saw some excitement come back into the chart. Right in here, right? Dropped and then popped. Boom. Bullish candle, bullish volume. We saw the dip bot. We saw some support building down in here. And then we ran and we broke and we sold off again. Immediately when we broke, we sold off. Exactly what happened in here. Now the market likes to rhyme, likes to do the same thing over and over, right? Are we watching that same thing right now and then dumping down here? That's what we got to watch for. This is the potential scenario with the bullish divergence to form on that weekly chart. My other thought process of why I think this is potentially going to bottom in here is that we've also shown enough exhaustion. We've run out of sellers and we have buyers here. And if the bulls could just defend, they got to defend tomorrow, Tuesday, maybe tomorrow it goes, Tuesday, they got to defend those. These 2 days are extremely important. We defend those 2 days, it will ride. It'll ride back up because it's like an inverted hammer. It's when you have exhaustion to the downside, right? What happens in here, if we look at an inverted hammer, right? If we look at an inverted hammer, let's just say this is the wick, that's the candle. Candle started the week down in here, it ran up, it closed down in here while we've been in a downtrend, right? Downtrend, 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 downtrend. And then this candlestick happens at the bottom of that downtrend. What that tells you is bears couldn't push it lower. Bulls had momentum to go up. There was still enough, maybe it's not going to go selling, but unable to close lower. And then you have that potential to see that run. And that's what I'm thinking here. There is that potential right now. We did break the lower highs. So what happens after you break the lower highs? You got to make a higher low. The best case scenario didn't happen. The best case scenario didn't happen. We didn't hold the back test, which is what I talked about in last week's video. We didn't hold the back test. This is what we wanted to happen for a strong move. Now, that's weak. Didn't happen, but potentially we are still out of sellers. We're going to know early, guys. Monday, Tuesday, be prepared. So now, after we broke the lower high, what do we want to do? We want to make a higher low. We want to make a healthy higher low, though. Healthy higher low off of the pivot that started to double bottom. A healthy higher low, not momentum, not holding the EMA wave, right? Not holding the EMA wave. The EMA wave is like you're in momentum. 8 EMA, most bullish momentum. 13 EMA, good, you're still holding the trend. 21 EMA, must hold, otherwise it's choppy. We're not holding. There's no momentum here. So the most bullish case now is to hold the golden zone. That's it. We got to hold it. That's it. If we don't hold it, then we don't have the excitement. We have to be like, oh, gotta hold that bottom again. Oh man, this is weak. We didn't hold that bottom in here, right? We didn't hold that bottom here. We tried and then we dumped. Remember the bottom? We tried. We went up. We didn't hold the golden pocket. It dumped right through it. Look at the bottom to the top. Let's run the golden pocket from here to the top, right? What happened? What happened? Platinum zone, golden zone, try to hold, try to hold, try to hold, big wick, dump. You lose it and then you bounce back into the supply zone, dump. That's what we got to see in here. We got to hold it, but we can't dump. We got to go back up. And that's why I'm saying, why am I saying Monday, Tuesday? Because we're in it right now. We got to hold it right in here, right now. And you could see we dumped into it. And look what's happened since we got into it. We're trying to hold. Trying. Look at these wicks. Look at this battle. Look at this battle. That's why it's so important right now. And my sense is we do have opportunity. 5 red months in a row. Haven't had 6 before. Great spot in the back test of the chart. That's just Bitcoin. You look at Ethereum, it's the same thing. It's the same thing, right? Again, we haven't broken to a new low. We already had a back test of the accumulation zone before the breakout, right? We have this potential scenario trading sideways for the entire month. We saw a little bit of a break up and we're again back in the golden zone. Look at that. Look at it. That's why we're going to know very quickly. Very quickly. Very quick touch on NASDAQ and ES. Obviously, we've got some turmoil in the overall market because of the escalations in the Middle East. Obviously, that's not good for the market. However, this week wasn't like a major sell-off. We had a full week of that information so far, right? We had a little bit of a pump up. That was a fake out, went down, pumped back up, fake out, went back down. We're still very much in the chop zone. This candlestick in here, this is the mother bar on the NASDAQ. February 6th candle is the most important candlestick on this chart right now. Must hold. It's so simple. It must hold. That's it. If it doesn't hold, there's potential for a strong escalation down. Because then we don't really have anything till about that 23 range. Okay? That right here is defending the double bottom. So that's the must hold candlestick. And then to talk about ES in here, the mother bar candlestick, we fell below it on Friday. That was a red flag, big red flag. It's going to need to hold right away. Right away, this Sunday night futures, we're going to need to see this dip hold. Otherwise, we're coming back down to 6.6. And if we lose 6.6, listen, this was just a strong trend. There's nothing until we get a back test of 6.3. So you got to be prepared for that. I hope you enjoyed the video. If you want to come join the Discord, shoot me a message on Instagram, email. Peace out, everybody.